Okay, guys, today we are going to be talking about our taxes, which isn't always the funnest subject to discuss, but I think that it's one that's vitally important because anytime that we are dealing with our money, we want to make sure that we have all our ducks in a row. So yay, taxes. Like I said, it's not really a fun, exciting subject, but it's one that we need to address head on. The worst thing you want to do is come, that April 15th deadline and you realize that you're going to owe money this year and you haven't saved anything. You haven't put anything away. The great thing about taxes is if you have to pay taxes or if you have tax responsibility, one, you should be excited about that because that means that you're actually making money with Beachbody. And this is just one of those exciting parts about being a girl boss is along with the fun stuff, you also have to take the responsibility and the not so exciting things that come along with it as well. So if you're paying taxes this year, if you have that financial responsibility, get excited, be thankful that you have a job that's paying and that you're just a part of that responsibility is paying those taxes on it. You are going to be required to pay your federal and your state taxes. This is just a basic overview call of all those things. I'm not going to dig in deep to the tax code. For anybody that knows tax law, it's a set of statutes that's about 6 inches thick, and that's our tax book. So I'm not going to obviously go through everything with you, but I'm going to give you a general idea of what you need to be looking into. I'm not going to be touching on anything that really relates to your specific state taxes. So this is all something that I would recommend that you look into as well. You talk to your CPA, you talk to your accountant, or you do some research on your own. But I think that, the general subjects that we are going to cover tonight are going to give you a pretty good idea of where you stand. And for most of us, these are going to cover most of our situations that we're in. So the magic number that I want you to think about is 600. 600 is that threshold number of whether or not you are going to be receiving a 1099 from Beachbody and how you are going to move forward with paying your taxes. If you make $600 or more, you will receive a 1099 from Beachbody. A 1099 is a tax form that designates you as an independent contractor with Beachbody. Now, an independent contractor is different from an employee in a couple ways, but mainly that means that Beachbody is not your boss. Beachbody doesn't set your hours. Beachbody can't fire you. Beachbody doesn't tell you when you can and can't take vacation. Doesn't tell you any of those things. And that's one of the reasons why we love this company is we get to be a part of something that lets us be our own boss. So you're not an employee, which means that Beachbody isn't taking out taxes for you every paycheck. For those of you who work other jobs, you'll notice, say you make $10 an hour and your paycheck is $400 for the week or whatever, you don't receive that $400. Your employer takes out those taxes for you for Social Security, for your state and federal, all those comes out. So at the end of the day, maybe you take home $325 or whatever it is for the week. This is different with the 1099 because that financial responsibility falls on you because you're not an employee, you're an independent contractor, which means that you have to be responsible enough to take out those taxes for yourself, put it away, save it, and make sure that you have enough to do your deductions, to make your payments. So all of that responsibility falls on you. And that's where that 1099 comes in. So if you're making more than $600, you should have received a 1099. For this tax year, well, the previous tax year, for your 2015 taxes, you should have already received this. If you have not, you need to contact Beachbody Coach Relations as soon as possible, and they will send you out a new one. There's nowhere on the website. You can't access it in Coach Online Office. There's no other place for you to get this except by contacting Coach Relations. Give them your new address, and they'll be able to send you one out pretty quickly. On your 1099, this is going to list your total gross income from Beachbody. So that's everything that you've made from the company. That's going to include your commissions, any quarterly bonuses that you've received, any team cycle bonuses, all of that will be listed on that 1099. So that's really, the main source of where all your income is coming from. If you make less than $600, you will not receive a 1099. So that's our threshold amount, is at $600. So for your tax year, last year, if you made less than $600, you're not going to receive a 1099 from Beachbody. Now, legally, I am required to tell you that you are still required to pay taxes on anything that you make, anything that you make. So if it was $100, it was $400, you're supposed to pay taxes on that. Now, I will say with a caveat, if you don't receive a 1099, Beachbody is not reporting it to the IRS. And if you don't report it to the IRS, then there's really no way of them knowing where that money is, where that money came from. But I cannot advise you to do anything other than pay taxes on what you owe. Do with it what you will, but I advise you to legally pay anything that you are required to on any income received from Beachbody. Wink, wink. Let's see. Okay, so figuring out how much you owe. You're going to take your 1099, which is your gross income, and then you're going to subtract any business deductions that you have, and that is going to give you your taxable income. So with that gross income, whatever that 1099 says you made, whether it's $600, $10,000, $100,000, whatever, then the next step is to subtract all of our business deductions, which we'll work through in the next step, and that'll give you your taxable income. Once you have that taxable income, you're going to plug that in, whether you're doing it on TurboTax, if you're taking it into your accountant, however you do that. Once you find your taxable income, that's what you'll actually pay taxes on. And where you fall in the tax bracket is all going to depend on if you have other jobs, if your spouse has a job, if you file with your spouse, if you're single, if you're married, if you have kids. All those factors play in, but that taxable income is what's going to be taxed. So if you made $10,000 with Beachbody last year and you are able to come up with $5,000 worth of business deductions, you would only have to pay taxes on that $5,000, which is left over, which would be your taxable income. All right, so the fun part, what are your business deductions? And I'm just going to touch on the biggest ones that we're going to experience. I recommend that anything that's ever connected to your business, that you save a receipt for it and you track it, because your CPA, your accountant, they may be different. Your state law may be different, so that you may work it a little bit differently, but so I would save anything that's related to your business, but these are the main things that we're going to be able to deduct in our businesses. One is business travel. And I know that the big things are if we're flying, if we're getting in an airplane or a train or a boat, all of those seem logical that we would save our business receipts for those. But I don't want you to neglect the small things, because all of the small things can really add up. Mileage, if you're traveling to a Super Saturday, if you're traveling to the post office, those are easy to calculate. Now, they're not going to add up to huge amounts of money, but each little thing is going to count. And anything that can reduce your taxable gross income is what we're aiming for here, because that's less that you're going to have to pay out into the end, or pay into at the end. So also keep in mind that business travel expenses are going to be any taxis, any Ubers, any parking fees, anything that you're doing that's related to your travel for Beachbody. The big things here are going to be Super Saturdays. If you're traveling to a team retreat, summit, all of those you want to make sure that you're keeping a receipt for. Going into that, or along with it, is your business conferences and retreats. If you're going to Summit this year, you want to save the receipt for the Summit ticket that you paid for, your airline fare, your hotel or your accommodations, your parking, anything that you've paid, anything that's related to that cost of travel. So your the travel costs, your lodging, even a portion of your meals are deductible. Something that's really great about meals is federal tax law says that if your meals are under $50, then there's not a requirement that you have a receipt for those. So what I think is an easy thing to do is, if you are traveling, just take a standard deduction for whatever days that you are traveling. So for me, I live in California. me and my CPA kind of agree that $30 is a general reasonable amount that I would take every day for a meal. So any day that I'm gone on a Beachbody trip, I deduct $30 every day as my business meal deduction, and I won't have to have a receipt for that. Now keep in mind with meals, you're only going to be able to write off 50% of that, but still 50% of $30 is still better than nothing. Other more common deductions that we kind of overlook are marketing and advertising expenses. Any campaign that you run through a Facebook ad, or if you do paid ad through like sponsorships on Instagram, if you do publications in a newspaper, a website, a business card, the fees that you pay to maintain your website, if you pay a web developer to do the website for you, if you make business cards, if you buy card stock and you make your own business cards, all of that is tax deductible. So make sure that you keep a receipt of it and that you keep track of it. Because you can deduct these things, but if you don't have any sort of recollection, if you don't have any sort of record for it, it's going to be very difficult for you to prove that it exists if you don't even remember that it happened. So this typically happens with a lot of the small things. If we're running, a Facebook ad and it's only $5 and it's going to run for 2 days and you spend $10 on it total, it's easy to overlook it and just think, oh, that's $10, no problem. But $10, again, all these things add up. So make sure that you're keeping track of this. The other one is dues and business fees. First of all, the easiest one to think of is your Beachbody coaching business fee. That's at $15.95 every month. That's something that's necessary for your business, and you can deduct that from your taxes. What we tend to overlook is all the other stuff. If you pay for a premium subscription to Zoom or Hootsuite or PicMonkey or any of that sort of thing, all of that is tax deductible. Any apps that you buy for your Beachbody business, all of those, Rona Designs or Pic Collage or anything like that. Again, it's $1.99. Do I really care? All of that stuff adds up. If you add all these little things up, you could be looking at hundreds or thousands of dollars. So yes, keep track of it, save a receipt, plug it into a spreadsheet, keep track of these things. Gifts, prizes, incentives, whether it's for you or whether it's for your coaches or for your challengers, you want to keep track of these things. These can be, if you're giving away those gift cards, if you're saying, buy 21 Day Fix Challenge Pack and I'll give you Fixate for free. All of those things are part of your business and you need to save those because they will be deductible at the end. Whether it's for your challengers or for your coaches. So if you buy, a new coach welcome packet and it includes a book and a t-shirt, make sure that you save a receipt for those. Do you have to have a separate receipt for those? So say I'm at Target and I buy a book and a t-shirt and then I buy deodorant and shampoo and blah, 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 all these other stuff for myself. You don't have to have a separate account or receipt for that. Some people are going to want to do that because it makes more sense for them to have, clear delineated lists. For some of us, it's not going to make any sense because we just haven't gotten to that point in our business. Our money's kind of intermingling. It doesn't really make sense for us. That's fine. Just make sure you have a copy of that receipt and that you can delineate what items belong to what. Something that I also think is helpful is when you are doing things like that you delineate on it who it's for. Because if in the off chance that you are audited and I turn in a receipt for Lululemon, and they're going to say, really, you bought yoga pants and that was a gift. If I'm able to show, yes, I bought 2 pairs of pants, one was for Christina, one was for Jody, and they were diamond gifts that they earned in the month of January, that's going to be a paper trail more likely to be followed than me just saying, oh yeah, I bought Lululemon. I don't know. It's going to look like I bought it for myself and I'm trying to improperly write it off. So make sure you keep track of things and delineate where they're actually going to, particularly for these prizes and gifts and incentives. Postage, this is an easy one. If you're sending things to challengers, if you're sending Shakeology to somebody, save the receipts for those. All right, moving on. Shakeology and your programs. Your programs are definitely deductible because these are part of your business, and Shakeology as well. Now, these two things, most of our CPAs or accountants, they're not really going to push back on, but you will occasionally get people, and I know I've already heard from people who've had theirs accountants push back on these things, or whoever's doing their taxes push back on these things and tell you, you can't deduct food, you can't deduct supplements, get out of here, no way. And that's absolutely true. You can't deduct your general cost of food. Keep in mind that if you're making a specific recipe for Beachbody and it's only for your business, what you could deduct that. If you're making, something for your cookbook or a clean eating group and you need to buy groceries just for this purpose, you could write that off because it's not just you writing off your groceries. I'm eating healthy. I'm going to write off $150 to Whole Foods. That's not going to fly. But if it's something that's related to your business, anything that you can tie to your business, it can be written off as a tax deduction. For Shakeology, if there is pushback, I want you to fight for this. And I think that it's fully defensible. Like I said, worst case scenario, if you get audited, I think this is going to be fully defensible because Shakeology is an absolute vital part of our business. If you're not drinking Shakeology, if you're not having it every month, then your business is going to suffer. It's not going to go places. One, you need it to qualify for leads. If you want to hit Success Club, you will have to have your own Shakeology order. If you're trying to earn, top 10 or top coach or elite, any of those things, you have to have your own HD order. The second part of that is, hey puppy, in order to prove if there's a pushback and they say, okay, I'll put it on there, but there's, I don't think it's deductible, whatever. The biggest thing that if you are audited, if someone takes a look into this and sees if it's a true business expense or not, how did you use this in your business? And how you prove that is by demonstrating that it's vital to the advertisement of your business. It's vital to the growth of your business. And that's you posting pictures of you drinking your Shakeology, you consistently sharing about Shakeology, because that is part of your marketing. That's the bread and butter of your business, is putting out those images of you sharing, shaking and sharing. And so the more consistent you are with this, if in the unlikely event that you are audited, you will have a consistent trail of you using this every single day and sharing that and using it in part of your marketing to grow your business. So if there's no other reason why you're sharing your Shakeology, it's to defeat an auditor. That's not the only reason though. And then your wear and share. Anything that you buy that has the Beachbody logo on it, if it's a Shakeology sweatshirt or a Hammer and Chisel t-shirt, save those receipts, because again, those are part of marketing. You may get some pushback of whether or not you can deduct clothes. Again, this isn't just a regular, I'm not trying to deduct a pair of jeans. I am specifically deducting something that is relevant to my business. If you are making like this team hat, I deducted this because this is something I made specifically for the team. This sweatshirt is not Beachbody. It's just a regular sweatshirt. I'm probably not going to be able to get away with deducting this. Now, if I'm buying clothes for other people, then that may be something that you are able to deduct because it falls into that other category of gifts or incentives. So be mindful. It may not fall into one category, but you could make it fall into another one. And then finally, another big deduction for people is going to be the home office. Keep in mind that if you do decide to take the deduction for the home office, this has to be a dedicated office. There must be a door. I think the statute requires that there's a door on it, but I know that it has to be a dedicated. You can't just set up a table in your bedroom or your kitchen and call it an office and deduct for it. It has to be a dedicated space where the primary purpose of it is just for your business. Okay, and just to cover a couple other things that I think that we overlook is a portion of your cell phone is going to be deductible, particularly for us, where I think the majority of our business is run on a cell phone. Fight for that deduction, especially maybe not, your actual talk minutes, but any data that you're using, I would fight for that, because it's primarily what you're using your business for, or your business on, is this platform of your cell phone. Any apps that you do for your cell phone, all of that is going to be deductible. If you buy a new computer, as a business deduction. Any paper supplies that you're using, any postcards that you send to your challengers or thank you notes, all of that is a business deduction. So keep track of it. How do we keep track of it? And so here we get to our next step, is how are we going to keep track of it? So I wanted to share a couple organization techniques for you. Mostly this is going to help us to prepare for next year. For this taxes that are due, 2015 taxes due in April 15th. This may not help you very much, but to prepare your 2016 taxes so you're ready for this next year, I do want to share a couple of things with you. First of all, I want you to just do your thing, girl. I'm not here to tell you, what's going to work for one of you has to work for everybody. If you are the super type A kind of personal, organized person where you need to keep everything in an Excel spreadsheet and you keep every receipt organized alphabetically and then you make a copy and you organize it by date, that's fine. Do you. If you're the kind of person that just throws everything in a box, shakes it around at the end of the year and, spits it at your accountant, that's fine too. Do what works for you. I'm not here to implement a system of organization on you that doesn't fit your lifestyle, because that's not going to serve you. It's not going to serve your purpose. That being said, you need to have some sort of system, some sort of coherency to what you're doing, because in the unlikely chance that you are audited, you're not going to be able to say to an IRS auditor, oh, I'm just doing my thing, girl, because they're not going to respond well to that. You need to have some sort of coherence to what you're keeping track of. So it may not make sense to me, it may not make sense to anybody else, but you have to be able to explain your system if it came down to it. So my recommendations at a minimum for your business is you should keep a running tab of your expenses and your deductions. The easiest way to do that is just in an Excel or a number spreadsheet. Pop it up anytime you come up with an expense. Write it down. If you want to keep a running tab of these things on your cell phone, just make a note. There are apps that you can download that will keep track of this for you. It's totally up to you if you want to invest in those kind of things. I don't. For me, I can just do it all in an Excel spreadsheet. I think that works fine. But for some of you, you may want to invest in more tools to help keep track of that for you. But I think keeping a running tab of your expenses is going to serve you best. Instead of going back in December and trying to figure out everything you did, keep track of it as you go along, because this is going to keep your memory fresh, and it's going to keep those expenses that tend to fall off, that fall out of our memory at the end of the year. It's going to keep them fresh, and then you'll know what happened with your money. Two, I recommend that you save all of your receipts. Even if you don't necessarily think that it may be relevant, just chuck it in a pile. I usually save, a big manila envelope, and I label it by month. January, and anything in the month of January, I just throw it in this manila envelope, seal it up, get one for February. Do what works for you, but I think that keeping some sort of system by month or quarterly is going to be the easiest for you to keep track of, because I recommend that you reconcile your things at least quarterly, or you can do it monthly. And what I mean by reconciliation or to reconcile things is you want to know what you're making and you want to know what you owe. Some of us are going to get that $200 paycheck every month or every week and just see it as money and spend it. And I don't recommend that unless you're damn sure that you're not going to owe anything on it. Because come April, when they say, okay, well, out of that $200, you actually owed 50 of it back and you don't have that, this is when you're going to run into problems. And that's at a very minimum. Say you made $20,000 or $100,000 and you're not saving any of it to pay back for taxes. You're going to run into a lot of issues with how you're going to deal with that. So don't make this a problem for yourself. Be proactive in how you're keeping track of these things. So I would say that at least quarterly, but if you can, do it every month. Figure out how much you made over that period and how much you're able to deduct, and figure out what you ballpark estimate you may owe for that year. If you are someone that is anticipating that you're going to owe a significant amount of money, and I would say that this is anybody that's making over $1,000 a month, if you're making it $15,000 a year or more, I think that you may have some tax liability. Again, I can't say this is true for everyone, but that's a range where it's difficult to write off a lot more than that. You may want to consider if you're putting quarterly advance payments. So if you're making $100,000 a year, you're gonna owe taxes on that. So instead of owing $40,000 in April, you can put advance payments forwards. Now, this may not be an applicable situation for any of us, most of us, but I just want you to be aware that that is an option if you do foresee this being something that may apply to you. And then another preliminary step, which I would say, kind of decide soon, is if you're going to file yourself or if you think a CPA may be necessary. And this just relates back to how you're going to keep track of things. For me and my husband, we do it ourselves. We don't necessarily need a CPA at this point. We don't own property. We don't own anything else. So it's not, we don't have really complicated taxes. So I'm able to do it ourselves. And that's where having my own system, the spreadsheets, keeping all the receipts, that makes sense for me. For others of you, it's not going to make sense. You own property, you own multiple properties, you own multiple properties in different states, you also have a business, your husband's also self-employed. There's a lot going on, so you may need to hire a CPA, or you already have a CPA or an accountant that you work with. That's fine. Just make sure you coordinate with them how they want you to keep track of your things, because they may not want your shoebox of receipts at the end. They may suggest a different way for you to keep track of it. So figure out if you are going to use one, and then kind of coordinate with them how it may be best for you to keep track, for them to figure out what you have going on at the end of the day and how to put that into good practice for you. And then a couple extra tips, because I want to, make sure you're being wise with your money, is one, be mindful with your money. Again, if you're bringing in $1,000 paycheck, keep in mind that some of that is going to be owed back in taxes. So don't spend all of it. Be mindful with your money, and that's where that reconciliation comes in, knowing what you're going to owe, and saving that portion that you're going to come back. It's not like when you have an employer and they take it out for you and then maybe you'll get a refund at the end of the year. You're responsible for saving that money for your taxes. So be mindful of what you're going to owe and save that money. Put that money away and don't spend it. Two, my second tip is I want you to invest back into your business. If you're making money, if you're having those deductions, or the easiest way to get deductions is to invest it back into your business. And I'm not going to tell you a certain amount to invest back or set a threshold or a recommendation, because it's your business. And I want you to do what's best for you and your family. I can never tell you what that is, but retreats or summit or, personal development or spending money on a class, invest in yourself. You're worth it. Your business is worth it. And those are deductions. So if you invest in your business, I think that it will help exponentially grow your business. So be mindful, think of opportunities and how you can invest in your business and yourself. And then lastly, I'm going to be a mama bear, save. Don't spend everything that you take in. And I know that, we don't always have the ability to save everything, and most of us are in this because it does help us pay the bills, and Beachbody has given us the opportunity to do amazing things with this. And it's not just, you know, we have extra money, but this money is going toward a purpose and it's helping us fulfill something that we need in our lives. So I'm not telling you, you know, you can't do anything fun or purposeful with your money, but just be mindful and save money. You don't have to spend everything that you make right now. And that's it. Thank you for being there. I'm going to close with Ryan Gosling because that should be the last thing on your mind ever. I appreciate that you were on the call. If you have any questions, please feel free to reach out to me. You know, as a disclaimer, I am not a tax lawyer. I am not an accountant. I am not a CPA. I am not any other whatever. I don't deal with money, but I can help you, or I can help put you in the right direction. If your accountant or CPA or tax attorney or anybody else has given you information that is counter to this, listen to them, not me, but hopefully this puts you in the right direction. Again, I'm here to help. If you have any questions, feel free to reach out. And with that, I will end the call. Thank you for being on. Let me figure out how to close this recording.